New all-time high yesterday. Pretty tight range. Suppress volatility. This is about as tight as you can get, right? This is like 12 basis points or something. Those aren't familiar with what basis point means. It's 100 basis points to 1%. So we used to have intraday ranges in the SPYs of 1% very commonly. Now you can probably look this up for 2017, but number is probably below 10. And we used to get, I don't know, 2 a month, maybe 3 a month, 4 a month. So it's very low. So at the all-time highs, market very strong. Attention being focused on any company that puts out a press release with the word blockchain. So just have alerts at the bottom and the top of that range from yesterday, maybe 20 cents outside of it. IWM. So straight up on the open to 154.75. So not quite, I guess, not quite to that high print from the day it got hammered. Very tight for IWM on a percentage basis, 74. So I definitely, I don't know, what is that, something like 50 basis points or something, maybe a little more. More volatility there. 154.25 it was bought at after the initial failure on the open above 154.5. Tried a couple times to get over, came down and then tested 153.80s for the last couple hours of the day. So have alerts at 153.87, 154.70. See if it can move outside of that range. And then 155 where it opened up and it sold off a few weeks ago. Okay, so definitely quieter, fresh news day than yesterday. Still a few things. DRI, which always reports earnings late, and does under 2 million shares a day, but on earnings days, looking back over the last couple of years, one day it did 10 million shares, a couple other times did 5-6 million shares. So it's going to be liquid. Let's see what it's done coming into the earnings. So it's run up over 10% into earnings. The numbers were good, not great. So I don't think it's enough for it to push through the all-time high. So you can see it had made a big run up here from $60 to 93. Had this day, I guess, where it took out the high and then reversed, filling this gap. So I'd look for the high to be put in here right on the open. 90.50, what I put on the sheet for support, 90.60. 90.60, 90, and then if they really want to mess with it, they bring it back down to here. And see. Again, earnings were fine, nice little slight beat, slight raise. You have to look at what it did coming into this. Not much volume, so we're really going to have to see what it does in the open. But certainly a spike right on the open above 93, starts to reverse, gets below 93. You want to be short and try to capture a move at least $1.50, $2 from the high. NAV. So this was one that was just beaten down for years. Just quickly on the daily. It's an incredible comeback. This used to be a big icon holding. I thought he got out of it years ago. So just did really poorly for the sector. For years it had been sort of bouncing. It came back up, bounced off 20 again to 40, doubled off the lows, and then it finally got below 20. The fact that that happened and it's all the way back up here in the 40s is impressive. It hasn't been up here in many years. Okay, so initially reaction got up above 48, 48 and a half, came off down to 46. They seem to be buying it now here at 46. A couple of spikes below. Tried to reverse back up here. So my first thing would be, can it actually get to this 47 area? And if it doesn't hold above, look for it to take out that pre-market support. And what do we have? Our first support level on the sheet is 45. So look to move to 47 down to 45 area, something like that. Right on the open, if it spikes down here, and then it comes back up to 46, I want to see if those buyers, pre-market buyers, become sellers. Where I believe it can reverse. Looks like they're on a conference call right now. Next one is Apple, which we don't really talk about too much. Just very liquid. Doesn't set up good that often, but I think it traded a couple weeks ago on the weakness in tech when it was below 170. It made a new all-time high yesterday. Got a downgrade from somebody who had been pretty bullish on the stock. So I prefer to listen to people who have been bullish as opposed to people who are bearish and then say more bearish things when they're wrong. Let's see, I think we're involved down here. So that's the all-time high. A lot of times when something's moving up and it gets a downgrade all-time high, people step in and buy that dip and push it up. And then that's the beginning of it, like kind of making a lower high, and maybe it ends up testing the bottom of this consolidation range over the next couple of days. So here's the move. It was in the 150s. Did this here. So I want to see if the little buying comes in on the open, and then maybe it comes down to 172, 172 and a half. What I put on the sheet, 172, 173. So right between those two prices. So yesterday was bought on the open. Here's the morning pullback to 176. So that would be kind of the ideal thing. Like they ripped it up to close to 176, shorted it, and then you'd want to see it get back down below this little glitch right here from yesterday's open, 175.50, and then play it to the pre-market low, and then see if it fails again to get back above 175 and play it down as long as it continues to trend. And if it closes near the lows, play it for move back into this area where it was consolidating a few days ago. So that would be the short play. If you don't get that pop up here, you want to watch first move down and then see what the retracement looks like. Does it retrace back up to the high 474s and fail there? VIPs. So VIPs ended up being a pretty good short. A little bit later in the morning, it already was gone. So right on the open, it flushed below 12, got long, came back up almost to 12 and a half. And then when it was consolidating here, holding this area and break to the upside, it looked like a good long. It was gapping up. It held the pre-market support right here. It was tight, broke to the upside. But then if you flipped it to short, when it took this support out, that's pretty good. And then if you pressed it below 12, that's good. It stopped right at 1170, which is 10% below the price that JD and Tencent bought in. So the institutions, people pay attention to that stuff. So they're in from 13. 10% discount to that is 1170. It's not a coincidence that people stepped in right there and bought. But still, the downtrend still continued in a downtrend. So this morning, where are we? Some other people saw that those guys invested, so they gapped it up a little bit this morning. It's already sold back down below 12. So you kind of have this range to work with: 1170, 1240 to 1250. Let's even call it 1260. So this area here, and the support area here. And I'd be just fading that until it just kind of moves outside of it. Fade the range. Roku. So Roku just broke out a couple days ago. We bought it on the breakout of 48 and a half. It's getting extended here, so I just wanted to put it on. Plus Morgan Stanley disclosed a stake in it, and it was gapping up this morning. So quite often in that situation where you had the breakout day one, went up again yesterday, you get a gap up this morning, maybe it tops out in the morning and comes back inside of yesterday's range. So there's a trade there. We start to get some sideways action. So you can see 50.5 pre-market. There were people clearly waiting for it when it got back up there, but they could define their risk on the short side. That's 40% short interest. Again, now it's already come off $1.50 from there, so it's a little bit more risky. And I had 57 as my first support, so below that, 56. I'm not looking for this huge pullback. It's possible it could have a bigger pullback, but just, over third day up in a row, catalyst to gap up, that's quite often sold for a reset. Akamai, AKM. So I'm still short a little bit from this spike on yesterday's open. Covered some into, well, actually, let's talk about this a little bit. So after it had the spike on the open, somebody was buying it 66.5, and then it started to hold below. So that was kind of a safer spot. You can see these wicks here when it kept on coming back up there and failing. And then that was a clean move, $1.50. It was about 30 cents of risk there, probably 25, 30 cents. So that's pretty good. Wasn't around when it was holding 65 here, or maybe I would have gotten flat when it came back down, couldn't get below. And I was trying to hold it for a bigger down move. That's why I didn't have an automatic cover there. And it came all the way back up to where it broke down from. So I imagine, whoops. Get rid of that. Imagine some people reshorted into this. Close below 66. So I guess what we're looking at is 65 support, 66.30 to 66.50 resistance. We'll see. Still happy that it looks like some rogue prints were up here this morning. Then I printed at 66. Maybe right on the open it spikes up and then comes back down below 66. Certainly if it starts to hold above 66.50, I'll cover my last few shares. So that's it. Continue to keep your eyes on what's going on in real time. Obviously, these guys are shorting some stocks that you might have trouble locating, so there's an issue there. But if something has fresh news and gaps up, low price stock, certainly you can play it, on the long side, at least for the first couple 100%. It seems if it's a low enough price stock, even if you can't short it, that's fine. There's actually more money to be made, even though there's more of a short leaning on our desk. Which is helpful in a lot of these junk stocks that go up from $1 to $5 and go back down to $1. But in a mania like this, blockchain crypto, where retail is involved, retail traders and the mom and pops who haven't been in the market since the financial crisis, they'll plow money in what's it, LF? So this was, I was looking at this yesterday in the pre-market, gapping up for no reason other than they bought a website involved in blockchain to 40. It got above 40. If you just played the breakout there, you probably would have been selling it by 60 or 70, but it ended up going up to 140, and they halted it, and it opened up at 60. I think we were only able to locate a couple of thousand shares on the short side yesterday. It was a little bit looser today. So, probably goes back down to 40 or 30 or lower, but wild action. But if you look at it on day one when it first gaps up and it consolidates and breaks out, you can risk $1 to make $10, $20. That's the market we're in right now. It's not going to happen with every stock. The volume's got to be there, good volume. As always, be patient and good luck.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.